My name's Richard. I'm one of the business analysts and writers here at Astranti, and in this video I'm going to be taking you through my analysis of the top 10 most likely issues likely to come up in the forthcoming management case study exam on Portafone. Okay, so before we get started, I'd like to quickly run you through the basis on which I've chosen these. First of all, it's to do with the focus in the pre-seen materials given to the issue. For example, if there's a lot of space devoted to the issue in the pre-seen materials, then we can infer that there is a degree of importance attached to that subject by the examiner. So, for example, in the pre-seen materials for Portafone, we see quite a lot of information given about batteries, and so we might be able to infer there that something around the issue of batteries could come up, and it's our job here to work out what are the likely scenarios. Okay, now the next thing is to look at the strategic importance of the issue to the directors of Portafone. So, for example, if it were to use the battery example again, let's say, well, okay, how important is something like that to the directors of Portafone? And then you're able to look at it and say, well, okay, this is obviously going to be of strategic importance because it affects safety, reputation, reverse logistics, and so on. Okay, so it's about conducting a SWOT analysis of the organisation and looking at the issue through that lens and saying, okay, is this a weakness? Is this a threat to us? Is this a strength, an opportunity for us? Okay, so that's the next way in which I decide on my choices. And then we come to my own past experience. So it's a question of what sort of things have come up in past exams. They're typically things that are regularly examined and something that's likely to come up in one form or another. Are they typical issues that candidates face in exams? And are they relatively easy to write about things like that? Because obviously the examiner wants you to be able to show and demonstrate your knowledge of the material that you've learnt and the theory and models that you've learnt. So obviously they want to give you something that's going to give you plenty of scope to do that. Okay, so when you put all these three things together, then you start to see patterns emerging and you can pick out the likely issues. Okay, so that's how I've made my choices. Now what I'd like to do is give you some advice on how to prepare for the issues. First of all, there are no marks in the exam at all for reciting models. What you need to do is actually prepare those models from the pre-seen information and actually apply the models, okay? And remember, you need to adapt your models for any new points in the unseen materials that come to you in the exam, so that, for example, if you've prepared a PESTEL model around market forces and then something slightly different comes up in the exam, then you'll need to adapt what you've prepared to fit the situation at hand. Okay. The other way that you can prepare is to practice mock exams that actually cover the key issues. All right. Another way is to find relevant real-life examples. So you could go online and have a look at news articles around the industry at hand, around the mobile phone industry, and actually prepare sample paragraphs using the models that you've learnt in your studies, and actually learn these paragraphs and bring them with you so you're armed in your mind with sample paragraphs that you could use in the exam. Or you could just use our industry pack, which actually does this hard work for you and gives you the key points. All right, you could learn typical key points about the industry. So, for example, a key point might be something like, should Portafone actually outsource one of its business processes like manufacturing or logistics? And then what would be the advantages and the disadvantages of doing that? And then actually have that situation and scenario prepared in your mind so that you can apply it to the unseen materials as they're presented to you. Okay, and you need to be prepared for which models to use to support your issue. So for example, if you've got an unseen issue around staffing, perhaps you need to make people redundant because you've outsourced a business process, then you need to be thinking, okay, here I'm going to need stakeholder mapping and look at the staff and the unions and the other people who have a stake in the business. So I'm going to start using Mendelow's matrix now to prepare so that I've done my stakeholder mapping in my mind. It's all ready for me to use in the exam. Okay? So that's how it's done, and without further ado, let's move on to the first issue. This is issue number 10, and it's the environment and competitor analysis. And when I say environment, I don't mean the rainforest. What I'm talking about is the business environment, the external analysis that you would do as part of your strategic work. You do some external analysis on the forces affecting the business from the outside. So this is all about the market conditions, the competitive environment, and so forth. Now, the reason that I've chose this is because there's a specific focus on it in the pre-seen. Okay, we learn that we've got a saturated market with slow growth. There are economic risks because Portafone's trading all over the world. There are changes in technology as we've seen feature phones grow into smartphones, and then we've started to see wearables and connected devices such as intelligent fridges, driverless cars, home assistants such as Amazon Echo, that sort of thing. Okay, the changing social needs of consumers. What are they looking for? Do they want smart wearables like the Apple Watch, or do they really want basic wearables like a Fitbit? Okay. Lots of choice in this market, very easily substituted products, okay? And there's hints at this all the way through the pre-seen, especially when we look at the numbers. Okay, so the likely issues that I think are probably going to come up around this are situations where, for example, you might be asked to assess the competitiveness of the industry or another industry. So for example, you might be asked to prepare a report in which you evaluate the competitiveness of the network industry as a prelude to a market entry, for example. And so therefore, in your pre-seen, lots of information about how that works. So for example, if we're told in the exam that the market for smartphones has reached saturation point and nothing is growing because consumers are basically not buying any more new phones, they're quite happy with the functionality of the phones that they've got, how is this going to impact the business? Well, obviously it's going to have a major impact on Portafone's business because all they do is make mobile phones. And of course this could tie into a risk management question, okay? Because, for example, if you're asked to compile a report on entering the wearables market, then you'd need to look at the benefits, obviously, of doing that to Portafone, but also the risks involved in taking on a new line of products, and is it risky to actually invest in your own research and development? Would it be less risky to acquire a player, and so forth? Okay, so you see how all these play in to each other. Now, here are the key points that you absolutely must raise when it comes to any question around environmental analysis. You've got to start with your PESTEL analysis. Okay, you've got to be considering the political, economical, social, technological, environmental and legal forces that all play into your particular industry or particular situation that you're dealing with. Okay, and when you do the PESTEL analysis, it's very easy from that to pick out recommendations that you would then go on to make. You also obviously need to be using Porter's 5 forces. Okay, this is crucial in any analysis of the competitive environment, because it will provide you with the answers to key dilemmas that you have. For example, if you can establish that in the wearables market there's high competition and easy substitution, for example, then you can see that those forces are high and that profitability is going to be low, for example, or however it plays out when you do your analysis in the exam. Okay, so you need to be bringing out these models and then applying them to the actual situation in the exam, and there you will be able to assess the actual impact on the corporate risks and strategic developments of the company, and that's where you will be able to evaluate the whole of this and then go on to make your recommendation, which you must do, whether you're asked to or not. Okay, now the next issue I want to look at is funding. Okay, this is about how you source finance. All right, and the reason that I've picked funding is that it is an absolutely key topic in business, and we're going to be looking at possibilities for funding, so equity or debt. We're going to be looking at dividend policy and what that policy signals to investors and the markets. All right, so funding can often be used as part of other questions. So if you're going back to the last example, if you're asked to evaluate a market entry or a new product category entry, then aside from the risk analysis and the environmental analysis and the competitive analysis, we obviously need to consider how we're going to fund this particular project. So if we were going to acquire a wearable startup, then we need to look at how we're going to fund that. Okay, are we going to take on more debt? Are we going to take on we're going to raise more equity finance? Okay, now funding is a subject that is very commonly examined, so we can expect that something around funding is going to come up either as part of another question or something on its own. And obviously cash is always needed to support any new investment and any kind of innovation. Luckily, when it comes to Portafone, they're in quite a good position when it comes to sourcing finance. They do have over 10 billion Farland dollars worth of cash in their account, and they have relatively low gearing, although it's rising slightly by 3 percentage points year on year to 13%. Gearing is very, very low risk, so they could look at sourcing more debt funding. They've recently raised some finance via equity, so they've got quite a lot of funds to play with, and it's possible that they could raise even more. Okay, let's move on to the next slide. The likely issues, I think, that are going to come around funding could be something around a long-term funding project. So this could be something around purchase of new machinery. They do have considerable assets when it comes to machinery, plants and processes and so forth. But you know, the technology is always changing, and it could be that Portafone finds itself slightly obsolete when it comes to its processes, and it needs to invest. It could be so a new technology project, okay, that needs new machines and processes, but it could also be the acquisition of another company, and so therefore we would need to look at the choice of funding methods that's going to support a long-term funding requirement. Now it could also be a case of short-term working capital. They do have quite a lot in the bank, but it may be that something comes up and they need to fund some short-term capital. We're going to look at dividend policy. Reducing dividends to retain profits for investments is one way to get some money, but obviously that does have an impact on investor perceptions, because if people are not getting any money out of their investment, then it doesn't look like such a great place to invest. So you need to consider then your stakeholders. It could come as an add-on to an investment issue, this kind of question. All right, so it may be a case of being asked to make a recommendation on an investment idea. Should we be investing in a certain factory or a certain process or set of machinery? And that really is your key to look at the funding requirements there and bring out this work. Now, the key points that you absolutely have to raise when it comes to funding issues. Firstly, cash flow. Okay, cash flow is the lifeblood of any business. Poor cash flow means that less cash is available for investment. So you need to be looking at the company's cash flow and assessing its health. Okay, budgeting is critical when it comes to cash flow, but also investment is critical. Okay, so you need to balance those out. Debt levels are rising at Portafone, and of course that does actually make it harder to get more debt funding, although it's worth pointing out that gearing is quite low at Portafone, so they're not such a scary bet for lenders as some other companies, and not such a scary bet as their competitor company Multone. There's a reasonable level of assets on the balance sheet, so we could look at selling assets to raise funds, or we could use them as security against which to raise some debt. Okay, so those are the key points that you need to be considering when it comes to a funding issue. This is how I would break it down. If I were you, you would want to use your cash for the small products. Okay, you don't really want to be dishing out large amounts of cash. So obviously, subject to a cash flow analysis showing that your funds are available there to do it, you want to be using cash for your small projects. There is a large amount in hand, but everything's relative. Okay, so it could be that the small project is actually quite expensive. Okay, now you want to use debt funding secured against your asset base. Okay, you want to get it via the bank, certainly for smaller amounts. Okay, of course you could sell existing assets to raise finance. And the thing is to look around for the scenarios that are less consistent with the company's current strategy. Equity really is going to be the last way that we would consider raising finance, due to the high cost of raising finance via equity, and of course the time scale of raising funds that way. Also, they've recently raised more equity, so maybe you want to look at debt funding before you look at equity. Now, the theory that you can use when it comes to funding are first of all the issue of dividend signalling. Okay, this is the impact of a dividend policy change on equity shareholders. So, for example, if you are going to start paying out all your earnings in dividends, well, some shareholders might be pleased to get the windfall, but it also means that you're not using that money to invest in the future of the company, which you really need to do, given the saturated nature of the market. So your long-term shareholders are going to be perhaps a little concerned that the value of your stock is not going to carry on rising, and that's what long-term shareholders want. Okay, you need to bring out the advantages of debt versus equity and show that you have given this some analysis. Debt obviously is quick to get and it's cheaper to get, so it's a lower cost form of funding. Equity, of course, there's no need to pay back the capital, and of course dividends are optional, unlike interest payments. Okay, interest payments need to be paid off, so you've got that cash flow issue there, whereas you don't have that with equity. All right, so those are the sorts of things that you need to bring out when you're discussing and analysing a funding issue. Now, before I go, I do want to remind you that Astranti Financial Training offers a range of materials beyond what you've seen here, including the study text, the full study text, the course videos, which actually drill down chapter by chapter and really get to the nub of things. The pre-seen analysis goes a little bit deeper into things, and the industry analysis gives you the real world context so that you become an expert in your case study industry. Mock exams are available, along with marking and feedback from our tutors. And then there are masterclasses which are given by experts, all of which is covered by the Astranti Pass Guarantee. So I hope you'll take a moment to check those out, and I'll see you on the next one.